Hi, I'm John Tangri, and today we're going to be talking about the options that underwater homeowners have when they're behind on their payments or in the middle of a foreclosure process. In a previous video, we talked about the 10 options these homeowners have and talked a little bit about it. Now we're going to talk about option number 1, which is the reinstatement of mortgage. The way it works is you go ahead and make up for all the back payments that you have with your lender in one lump sum. For example, you haven't paid for 10 months and your foreclosure sale date is coming up next month. What you do is you take those 10 months worth of mortgage payments, let's say it's $2,500 a month, multiply that by 10, that's $25,000. You take that $25,000 lump sum and give it to the bank, and the bank stops the foreclosure coming up next month. Now, when you're thinking about spending all this money, you have to consider 3 options. Number 1, is the bank going to give you either a loan modification or a principal reduction if you do this? So in other words, you pay them $25,000 and they give you a loan modification or a principal reduction guaranteed in writing. If they do that, then it's some benefit for you to take all your savings, a lot of your savings, and give it to the bank. If not, then I don't think it's a good option. Number 2 you have to consider is, what's the difference between the mortgage that you owe and the current market value? So for example, let's say you've got the mortgage that's $300,000 and the current market value is $200,000. Is it worth for you to go ahead and make that lump sum payment and then still continue to pay the same mortgage monthly payment that you were paying before? So one of the risks that you have is you might again fall back into the trap of falling behind on your monthly payments, and then what happens? So if there's too much of a difference, is it really worth to carry that $100,000 in this example for the next many years until you break even and the market value comes up to $300,000? The third thing you have to do is compare. Compare what happens if you let this go and do a short sale, not just let it foreclose, but do a short sale, and in 2 years or so you have the savings that you didn't go to the bank. You can go ahead and put a down payment on a similar property, and maybe instead of paying $200,000 you might pay $210,000 or $215,000, but still you're not $85,000 behind to begin with this new house. So those are 3 options you want to consider before you go ahead and give a lump sum to the bank in order to stop your foreclosure sale. You have another option, which is if you're 3 weeks or more before the foreclosure sale date is coming up, all you have to do is give us a call. We'll set up the short sale process very quickly, usually within 72 hours, and we're pretty successful at stopping the foreclosure sale for you. Also, that'll give you an opportunity to go ahead and stay in your house for a couple more months and a chance to get the relocation expenses that banks are offering between $300,000 to $30,000 if you do a short sale. If you go ahead and let it go to foreclosure, I'm afraid that what is going to end up happening is you're going to end up being on a very slow and painful slide into a very difficult financial future. You want to learn a little bit more about what those risks are to your financial future. Look at option number 10, which is successful short sales. Thank you for listening to this video, and if you like it, please let everybody that you know that might be underwater or behind on their payments or has a foreclosure process going on or a foreclosure sale, so together we can help either stop this foreclosure and save their home or save their financial future.